All right, BBBY. Let's jump into it. We'll start where we left off in the previous video, where Anemo identified 3 bullish daily divergences, which told us that price wanted to revisit the daily trigger. So just a short little recap. We'll go over the previous 3 bullish divergences that led to the move back to the daily trigger, and then we'll go over to what happened this past week and then what we can expect in the future. So we know here, if you're unfamiliar with how Anemo works, bullish divergences is when price makes a new low, but velocity, which in this case is these blue bars, does not make a new low with price, and that is 1 bullish divergence. After 3 bullish divergences, price makes its way back to the trigger on whichever time frame the divergences happen. So over here, price came down to 691, and this is where your velocity made the most extreme print. And so here on this whole leg down, price bottomed right here, and so this is going to be your first bullish divergence, because as you can see, price made a new low, but velocity, the blue bar, did not make a new low. And then price retraces a bit, comes down, and makes the second new low, which is your second bullish divergence, because the daily velocity still has not made a more extreme print than it did here. And so you know that on this third low, it's going to be your third bullish divergence, which tells you that price wants to return to the daily trigger, which it did, and then got knocked down again. So after that revisit to the daily trigger, we start the count over. So as this selling is happening, the daily velocity is getting more extreme to the downside, which is normal during a selling environment. And then your most extreme print is recorded right here when price made a low of 354. And so this new low of 336 would be your first new low, which is bullish divergence, because the daily velocity did not print a new low. And this is going to be your second bullish divergence, because the daily velocity did not print a new low. So first bullish divergence, second bullish divergence, and that tells you that any new low will be your third bullish divergence, and price will want to attack the daily trigger, which is what happened. It did fall a bit short. Not only did it fall a bit short here, but it also fell a bit short here, which is a little bit unusual, but it doesn't mean that it still won't attack the daily trigger, which has now come down to 393. Now, again, the sell program originally turns on when the hourly trigger crosses below the daily trigger, and the daily velocity, the divergences, tell us when that is running out of steam and price is ready to move on back up. Now we also know, as discussed in the previous video, that we had weekly bullish divergences as well. And so with weekly bullish divergences, we can expect price to revisit the weekly trigger, which is currently at 744. It'll drop down each week by about 30 cents, it looks like. So here was the most extreme print. You could see the velocity reading. The weekly velocity was negative 345, and price at this time was in the $5 range. And then price made a new low right here at 426, and velocity did not make a new low, so that's your first bullish divergence. And then price made another new low here at about 360, and the velocity was negative 341, which is not as extreme as over here, negative 345. So although it's only slight, it's still your second bullish weekly divergence. And then when price made this new low, that is the third bullish weekly divergence, and that tells us that now price wants to move up to this weekly trigger at 744. However, in order to get there, 2 things need to happen. One is that price needs to break above the daily trigger, which is currently at 393. And even after that happens, the second thing that needs to happen is the hourly trigger, which is currently at 345, needs to cross up above the daily trigger. Once that happens, we can expect to move to the weekly trigger, similar to here, where price broke above the daily trigger, the hourly trigger crossed the daily trigger, and this was August 4th, and already by August 8th, only 4 days later, price attacked the weekly trigger. So in my last video, I explained in the way to look at it for traders, particularly if you're buy and hold, then you know you're buying and holding anyway, so the video doesn't really pertain to you, doesn't really matter where price is going to go. But for traders, there were 2 trades here. The first trade is this move. You know, you see your third bullish daily divergence forming, and so you know this was your most extreme print. You know you had your first bullish daily divergence here. You know you had your second bullish daily divergence here. And so if you're a trader, you're waiting for any new low, because you know at this point your next low is going to be a third bullish divergence in comparison to this move. And once you have your third bullish divergence, we can expect to move back to the daily trigger. So this was the first trade. We played this week. Again, this is just for traders. For buy and hold, the next target would be 744. But if you're trying to trade this, whether it's with options or whether it's with shares, the next trade that we'd be looking for is when price breaks above 393 and the hourly trigger crosses above the daily trigger, and that is when we would expect a move up to attack the weekly trigger at 744. Now, remember that each trigger acts as a strong acceleration level, and so you can see when price broke through this daily trigger, it acted as a strong acceleration, and price accelerated upwards to this trigger. When price broke through the weekly trigger, it accelerated really quickly to the monthly trigger, and when price broke above the monthly trigger, it accelerated really quickly. Now, because the monthly velocity was negative, it did tell us that price was going to be pulled back under the monthly trigger before the month of August was over, which is what happened. So going back to where we are now, the next move that I would expect for BBBY is for BBBY to continue, crawling up towards this daily trigger. Once it attacks it, we can see actually that the daily velocity has been getting better for 1, 2, 3, 4 straight days. It's been the negative daily velocity is decreasing. So if you look at the negative daily velocity right now, it's 0.03. And so with this reading, it is possible for price to break above the daily trigger and hold. So best case scenario for BBBY is that it continues to slowly march up, breaks above this daily trigger, gets some really strong acceleration up to the upside. The hourly trigger will cross above the daily trigger, and that will lead to a move back to the weekly trigger, which is currently at 744. Now, downside risk is if price breaks back below the hourly trigger. Although this isn't a favorable outcome, if price does break below 345, which is the hourly trigger currently, then it will most likely delay this move up to the weekly trigger for a little bit of time. If the hourly trigger keeps leading price upwards and price breaks above 393, then within a short period of time, you can expect a fast attack of this weekly trigger at 744. The other bear possibility is if price breaks above 393, but then the hourly trigger comes up towards the daily trigger, but instead of crossing, rejects and comes down. And we call that one a bear plane. So this is important to pay attention to. Whether you're a trader or buy and hold, if price breaks above the daily trigger, but the hourly trigger can't cross above the daily trigger as well, then we would not expect an attack of 744. The only scenario where we are expecting an attack of the weekly trigger at 744 is if price breaks above the daily trigger, and then it accelerates to the upside. So the daily trigger should act as a strong acceleration level. And then if it accelerates high enough to the upside, then the hourly trigger will cross above the daily trigger. And then that's when we can expect price to fill this air pocket to 744. Good luck, everyone.